Hi everyone, my name is Jeremiah, and today we're going to talk about the impact of the increase in interest rate to home ownership. So let's get right into it. When we entered into a recession in March 2020 because of the pandemic and also the disruption in the supply chain, the Federal Reserve realized that the pandemic clearly was going to have an impact in the growth of the economy. So what they did is that they made sure that there was enough money for banks to be able to give to consumers. Because the Federal Reserve knew that the pandemic was going to have a long-lasting impact on the growth of the economy, the Federal Reserve decided that they were going to lower the target range for the Fed fund rate by a whole point. That is from 1.00% and 1.25% to 0% and 0.25%. What that did was that it assured consumers that they were going to have lower interest rates over the period of the pandemic. Now that the country is experiencing a 40-year high on inflation and also a steady growth of the economy, the Federal Reserve will try to curb down inflation by increasing interest rates in 2022. What does that mean to you as a home buyer? It means that interest rates are going to go up, and we've seen that interest rates has been going up steadily from November 2021 right into January 2022. So as a home buyer, if you have not locked up your interest rate yet, you want to do so as soon as possible. Let's take this example to illustrate the impact of the increase in interest rate to your monthly mortgage payment. Let's say we have two people who have decided that they want to buy a home. One person already locked their interest rate at 3.25%. The next person is going to get an interest rate of 3.65%. They are all going to a 30-year conventional fixed mortgage with a 3.5% down payment. Their purchase price is going to be $350,000. Based on the mortgage calculation, the one who locked up their interest rate at 3.25% is going to be paying the mortgage plus interest plus PMI is going to be $1,893. And the person who had an interest rate of 3.65% is going to be paying $1,969 approximately a month. The difference between the two people is going to be $76 per month. You might think that $76 is not that much, but you have to look at it over the term of the loan, which is 30 years. That means the person who has a 3.65% interest rate is going to pay $27,360,000 more for the same purchase price of $350. So guys, if you have not already been pre-approved or you've not locked up your interest rate, make sure you talk to your lender or you speak to your real estate agent so that they can help you get pre-approved and lock up your interest rate. Rates are going to go up in 2022 because the Federal Reserve believes that the economy is going to recover steadily, and they believe that we are getting to the end of the pandemic. So guys, thank you very much for watching this video. Till we meet again, take care.